Very good morning, my dear students, friends of our esteemed government first grade college, Gauri Bidnoor. As you all notice that the classes are being held very normally, absolutely. This is another platform which is available. So is supposed to be used to increase your efficiency and effectivity, along with that the time management. Okay, so what I mean to say, you all have to learn, number one, listening skills and spoken skills in English. That is the intention with which all my videos you find in English, right? That's very simple English. I have received feedbacks of few students claiming that videos are not in Kannada. Absolutely no issue at all. How long you would listen, right? And just what happens if you don't try, correct? What happens? You will miss the bus, an opportunity to learn. Please try to understand, bear with the time and focus. Suppose you don't understand the video, you have every opportunity to rewind, correct? So when you review the video, right, over and again, you would better understand. This is one way, and many of your classmates have understood, right, by watching the same video. What you can do, ask them, they will help you out. They will be able to explain in Kannada. Absolutely no need to worry. When I come back to the classes one-to-one, you ask me, there also I am ready. I would explain. Right? So let us not waste and prolong it further. Let me take you through today's presentation of illustration number 6, which has already been sent. It is available with you. So here, interdepartmental transfer at cost that is happening. What is interdepartmental transfer? So there are two departments, let us assume, right? One department supplies goods to another department, and another department also offers its services to the other department. That means A is supplying goods to B. That means for A it is sales and for B it is purchases. In A's departmental accounts, you would be recording on the credit side because it is sales for A. In the B's column on the debit side, you would be recording, correct, because it is purchases to B department. So when A department is purchasing each unit by paying 100 rupees, this is the example what I'm quoting, right? If it doesn't charge any profit at the same 100 rupees, if the goods are supplied to B, then see, purchasing is also 100 rupees per unit, and supplying one same rate at the same rate to B department. What does it mean? You are not charging any profit, correct? That means A department is not charging any profit, which is known as interdepartmental transfers at cost. Means from one department to another department, you are supplying the goods, you are not charging any profit, right? That is the reason why it is cost. A firm has two departments, X and Y. From the following figures, prepare the department to trading and profit and loss account and balance sheet for the year ended 31st March 2015. See, now one more thing is being added. What is that? Right? See, movement of the cursor is very, very important while listening. What did I say? Use your notebook and pen. Go simultaneously write it and you pay attention to. Then you see the difference. Correct? So hence, what is very important for you to perform and understand in a better manner, right? It is very, very significant. I'm very sorry. It's significant that you write simultaneously and you would better understand. Okay. Why? Because trading account, profit and loss account, and balance sheet is also been asked in this sum. Okay. So here debit side and credit side, they have categorized opening stock, X, Y, 15,000, 20,000, right? It's given separate. Carriage inwards is given 3,000. Remember, carriage inwards, if the allocation is not given, you need to allocate in net purchases ratio. Then this is carriage outwards 5,000. This goes to profit and loss account. Advertising 10,000. Profit and loss account it goes. Salaries of X and Y separately given 6,000, 7,000. It goes to profit and loss account inside. General salaries profit and loss account 12,000. Rent rates profit and loss account 9,000. Lighting 900 rupees. Fixtures. See, this is the asset. Fixtures is the asset. This goes to balance sheet. Sundry debtors 20,000. It goes to asset side. Bad debts. It is the item to be written in profit and loss account because it is expenditure 1,600. It is loss actually. Purchases X 60,000, Y 40,000. This goes to trading account. Bank balance to be written in balance sheet. Bank interest, it is to be written in profit and loss account, debit side. Transfer from Y means in X department, it is purchases. Okay. In Y department, it is sales. Okay. So transfer to X, it is sales. See, in Y department, it is sales. In X department, it is purchases. Why? Because it is written on debit side. Debit side, always you write purchases. Credit side, always you write sales. This is known as interdepartmental transfer. See, transfer from Y, transfer to X. Okay. So sales X and Y 1,60,000. That goes to trading. Sundry creditors 15,000 goes to balance sheet. Capital 30,000. Loan 30,000. Both will go to balance sheet liabilities side. Okay. Total 2,40,000 rupees each. Now, area occupied by the two departments in the ratio of 2:1. So, this X and Y building in which 2/3, say 2:1 means X has occupied 2 shares, that is 2 divided by 3. And Y has occupied 1 divided by 3. This is the portion which the building have occupied. Okay. Why this is given? I'll tell you. General salaries are to be divided in the ratio of 5:3. Here in the, right, here there is general salaries, right? 12,000. You need to divide in 5:3. The closing stock were X 14,000, Y 15,000. This goes to trading account, credit side. Depreciation of fixtures is 10%. Here it is not given. We should be very careful. So fixtures amount is given 10%. You need to charge what? Depreciation. So fixtures amount here is 15,000, right? Yes. On 15,000, 10% depreciation you need to charge. Correct now? 10% of this 1,500 in profit and loss account. Okay. In the ratio of space occupied, that means depreciation is to be divided in space occupied by the department. See, area occupied, space occupied, both are one and the same. 2:1. Correct now? So 1,500, you get it. 15,000 into 10%, right? So 2:1 means 1,500 is the ratio in which this depreciation is to be allocated to department of X and Y. Okay. All other expenses are apportioned in the sales ratio. What is the instruction? Remaining, for few, they have given the basis, and for others, it is not given. They said in the sales ratio, you need to distribute all other expenses. Okay. Now let us see the important point. Okay. One is purchases ratio. Purchases ratio. How much is the purchases ratio here? Yes. 60,000 and 40,000. That is 3:2. 3:2. Okay. Understood. Right. What is the sales ratio? Sales 1 lakh is to 60,000. So 1 lakh is to 60,000 means 5:3. 5:3. How come? See, these 4 zeros go up. Alba? 10 and 6. 2 5s are 2 3s are. So sales ratio is 5:3. Remember now. So departmental trading and professional account, this you know it very well. Opening stock, this you are aware, right? 15, 20, 35. To purchases 60,000, 40,000, 1 lakh. So ratio here is 3:2. Okay. Then sales here is 1 lakh and 60,000, 1 lakh 60,000. Then there is after purchases, there is transfer, correct? Goods are coming in. So in case of X, it is purchases. I told you, right? Because it is written on debit side. So to transfer, you should write. That means goods have been purchased from Y department. Which department is purchasing? X. So in department X, it is recorded on debit side. This is the transfer means purchases. And similarly on credit side, see, by transfer. In which department you will write? Y department you should write. So for X, it is purchases. For Y department, it is sales. Okay. See, to transfer in X column 5,000, by transfer in Y's column 5,000. Same amount. This is what? Interdepartmental transfers. This you have understood, I think. Okay. Then there is carriage inwards. As I have already told you, for carriage inwards, you need to follow, even though they don't tell you, purchases ratio. Purchases ratio is 3:2. Total is 3,000, 1,800, and 1,200. Then before closing this, you need to write closing stock. Write 14,000, 15,000, it's given adjustments, 29,000. Hence, you total it. Credit side, 1,14,000 of X department. X department, you write debit side 1,14,000 minus 15,000, 60,000, 5,000 and 1,800. You get 32,200 as the gross profit. For Y department, total is 80,000. Debit side write 80,000 minus all the debit items, you get 18,800 as the gross profit. In total, 1,94,000, 1,94,000 debit side, difference is 51,000 is the total gross profit of department X and Y. Similarly, we shall continue with profit and loss account. You know it very well. So by gross profit brought down 32,200, 18,800, total 51,000. What is the other instruction? Some expenses they have said this is the ratio in which you have to distribute. For some other expenses, what did they say? You have to follow sales ratio. Very simple, right? Carriage is given, total 5,000. What is the sales ratio? 5:3. So hence 3,125 for X, 1,875 per Y. Advertising 5:3. What is that? Sales ratio. So 10,000, 6,250, 3,750. Then salaries, it's not a portion. They have given individually 6,000, 7,000, total 30. General salaries, yes, 7,500, 4,500, total 12,000 because 5:3 sales ratio. Rent and rates 2:1, you know, space occupied, area occupied by department X and department Y is 2:1. So rent and rates to be apportioned 9,000, in which 6,000 goes to X, 3,000 goes to Y. Lighting 2:1. Lighting 2:1. Why? Because lighting is to be apportioned in which ratio? Space occupied or number of light points of X and Y. So what has been given in the sum? Space occupied, area occupied is given. Nothing they have said. So that's the reason why lighting is distributed in 2:1. Okay. So how much? 900 means 600, 300. Next, bad debts, sales ratio 1,600, total 1,600. Bank interest 4,000, so 5:3, 2,500, 1,500. Then depreciation 1,500, you know that 15,000 into 10%. So in 2:1, that is 1,500. Balance sheet, you would be getting credits, debit side more 33,975. And credit side 33,975, difference is 1,775 is a net loss for department X. Similarly, department Y 23,025 is the total. Debit side, same total you write on the credit side 23,025 minus 18,800, you get 4,225 as a net loss. Total net loss is 6,000 rupees. So here 57,000 minus 51,000, you get 6,000 rupees is the net loss. So which department is suffering more? Yes, the department Y is suffering more loss. Correct? So this you can easily make. See, there is a note. Carriage inwards to be apportioned in the ratio of purchases. As I have already told you, this you know it very well. 60,000, 40,000. So therefore 3:2. And carriage outwards to be apportioned in the ratio of sales 5:3. How? Because 1,60,000. Got it? Now in the balance sheet. So balance sheet, you know the format. On asset side, first you need to write fixed assets. So in the sum, what is the fixed assets? Only fixtures. 15,000. There is depreciation, which we have charged 1,500 rupees, correct? Minus it, 13,500. Sundry debtors, as usually, right? 20,000. It's given in the trial balance, right? So bank balance has been given 6,500. In closing stock X and Y, 14,000, 15,000. And capital, you know it, 30,000 rupees has been given. Net loss, so hence it is to be subtracted. If it is profit, you would have had it, right? So there is loss, 6,000 loss. Then you are getting 24,000 rupees. Total capital outside. This is opening, this is closing. Sundry creditors, 15,000. Loan, 30,000. So hence 69,000 is the assets and liabilities total. What I mean to say, please revise again and again till you understand. For this purpose, you need to have what? The prior knowledge of the trading account, profit and loss account, and the format of balance sheet. So my request here, don't neglect. Revise once again, right? Revisit, review, watch it till you understand. So after understanding at least two similar sums by changing the figures, it is your choice, maybe double, triple, or one more adjustment you could add it to the existing sum. Have your own problem, then write the solution as well. I hope you will be following what the instructions and advice here I have given. So this is Suresh Babu Mg, thanking you all, hoping that you have been benefiting out of these video lectures. So this is again Suresh Babu from Government First Grade College, Gauri. Thank you all.